Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research with Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, it has been quite the week. Bitcoin has hit several new all-time highs. We even surpassed $90,000 this morning. And we're just kind of off to the races in terms of inflows on the ETH and Bitcoin ETFs. In other news, we're still waiting to see really how the new administration will be with crypto, particularly who they appoint as SEC chair. But the market overall seems to be very risk on as of late. So we'll talk about some specific things that are happening, though, unrelated to just Bitcoin and ETH. Okay, so to start, we're going to talk about BNB or Binance Coin. So on Monday, FTX filed a $1.7 billion lawsuit against the Binance cryptocurrency exchange and its founder, Changpeng Zhao. So the lawsuit is like one of many that the FTX estate has filed in an attempt to claw back assets for creditors. So in this case, FTX is alleging that Binance fraudulently paid for some repurchased shares using depositor money from the FTX exchange. So at the end of 2019, just for context, Binance invested in FTX and they paid with this investment with like their native BNB token. And they also invested again into FTX's parent company at another, basically a different way to get exposure to them in 2020. So all in, they had quite a big share of FTX. And in about mid 2021, it kind of became apparent that the two companies were really going after a lot of the same market share and pie. And so instead of, kind of having potential for conflicts of interest between those two investments, they agreed to do this share repurchase where Binance repurchased the shares of, the FTX repurchased shares that Binance had owned, the idea giving them kind of this bit of independence. So basically, the lawsuit alleges that FTX paid Binance using using depositor funds that the FTX exchange was already insolvent at that time. So this is obviously a big allegation, not great, but Binance has basically called the lawsuit meritless. Worth noting that Binance is still the biggest exchange in crypto. And so as a result, they make quite a bit of money. So even though 1.6 billion sounds like a lot of money, it may not be all that much for the exchange to have to fork over if it is clawed back. But we will see if that even happens. So BNB has been lagging the market a bit this week. It's up only 4.4%. Okay, next up, we're going to talk about Blur. So I haven't talked about this one in a while. Also on Monday, a proposal was released to enable a fee switch on the NFT trading platform Blur. So Blur launched in 2022. They've been like the leading NFT marketplace by volume. But I will say, unfortunately, NFT volume in general has been down quite a bit over the last year, particularly. It's down over 77% overall. So even though they are the best NFT marketplace, the leading NFT marketplace, they're still not doing so hot. So as the volumes have trended down, so has Blur's revenue. It went from at one point it was 144 million annualized at Blur's high point about a year and a half ago, in early 2023, and today they are only at $4 million annualized. So the proposal basically suggests instituting what is known as like vote escrow or a VE model on Blur. So if you're not familiar with the VE model is the idea that in order to participate in governance, you have to lock your tokens in what's called a vote escrow contract. And the longer you lock up your tokens, the more of the staking reward and the more voting power that you accrue. So you can lock up to 4 years. That gives you like the maximum amount of voting power. You can lock only 2 years, 1 year. But the idea here is that by locking up your tokens, you're theoretically earning more. But then at the same time, you're also taking those tokens off the market because they can't be used. So the 100% of the trade, the proposal says that 100% of the trading fees will go to those who've locked their Blur in the VE contract. So the Fee switch, like I said, super positive for Blur, but the current fees aren't really generating all that much of an incentive for users to lock up their tokens for a long period of time. We'd really want to see a big turnaround in overall NFT volumes to see if something like this could be exciting. Blur is up 9.5% on the week. All right, next we're going to talk about Near Protocol. So, Near, the Layer 1 protocol, held their annual conference called Redacted over the weekend. And it culminated in this big announcement that Near is planning to build the largest open source AI model with 1 trillion parameters. So if they actually achieve this, it's going to be about 3.5 times bigger than Meta's Open Llama model. And what they're going to do to get there is they're actually going to crowdsource a lot of the research. It's not going to just be like using their own internal data points and stuff. So it's a pretty ambitious project. Near has definitely been working more in the artificial intelligence space, kind of leveraging the power and speed of its own blockchain to accommodate some of these kind of like newer use cases in the AI crypto crossover. But it's still a pretty ambitious plan, like I mentioned, and it's very expensive. So they also announced that they're going to be raising, they're going to be doing a series of token raises, totaling $160 million in order to fund this project. So far, the project already has, I think they said 500 million parameters getting to work on this through kind of some of their own internal channels. And we'll see how this goes. So Near since this announcement is up about 9%, but just overall with the market being up and the conference, the token is up 22% in the last 7 days. All right, last up, we're going to talk about Athena. So Athena is also on the fee switch realm. So last week, market making firm Wintermute announced that they put out a proposal that basically proposed a fee switch for Athena's ENA governance token. So Athena, if you are not familiar, they launched earlier this year. They are basically a pseudo decentralized stablecoin called USDE. The stablecoin, though, is backed by a combination of staked Ethereum and then a short position in Ethereum futures against that long position. So you basically have like a stable non-dollar pegged backing for their stablecoin. So they've had a ton of success. USDE has grown to just over 3 billion in AUM. And so far to date, they have made $131 million in revenue since launching. And that was just about, I think, 7 or 8 months ago. So there's a lot of revenue sitting on the table potentially for token holders. The proposal recommends basically just having a very open discussion about the fee switch with no exact parameters just yet on how much would go to token holders, only that they would be staked in the SENA contract. Athena is up big on this news, up 32% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.